Hi, this is Robin. I'm one of the Fin module leaders. The purpose of this short video is to talk candidates through an explanation of other comprehensive income. We will talk through the accounts that commonly get recognised in other comprehensive income, or OCI, how they work and how it all looks in the financial statements, and how the statement of profit or loss and other comprehensive income, which we call SPLOCHI, feed into the statement of changes in equity and the balance sheet. We will start off with the revaluation of land. This piece of land has had previous revaluations on it. We'll cover revaluations in more detail in Unit 7. The general rule with revaluation increments or increases under IAS 16 is that gains go to the revaluation surplus account. The movement in this account is one of the items that are disclosed in other comprehensive income, or OCI. Like the profit and loss, OCI is all about movements. But OCI is all about movements in reserves. So what are some reserve accounts that you might be familiar with or that you might encounter in the Fin module? The revaluation surplus, the foreign currency translation reserve, and the cash flow hedge reserve. Retained earnings is also a kind of reserve, but it doesn't belong in OCI because the movements are already detailed in the profit and loss. Now, before we get to discussing other comprehensive income in more detail, let's just remember how the profit and loss works. It shows revenues and expenses for each year, and these accounts get closed off to retained earnings each year, and we start again in the next accounting period. Then we have other comprehensive income. Now, the accounting standards can really confuse you on this, so you need to have your wits about you. The standards often talk about items being recognised in OCI, but that's not really true. OCI isn't an account. You'd never put a journal entry to an account called OCI. It's just not an account. OCI is a way of disclosing movements in reserve accounts in the financial statements. Underpinning OCI are the reserve accounts themselves, with their balances that carry forward from year to year. Other comprehensive income highlights the movements that have occurred during the year that are important for the users of the financial statements to be aware of. So back to our revaluation of land. This land was previously revalued by $3,000 in an earlier year. This year the value has gone up by a further $2,000. Obviously, we're not dealing with the Sydney property market. So we take up a journal entry for the revaluation by debiting land, $2,000, and crediting revaluation surplus. As we saw a moment ago, IAS 16, paragraph 39, tells us to recognise the gain in other comprehensive income under the heading of revaluation surplus. First, the SPLOCHI takes us through our very basic profit and loss and other comprehensive income that we've created in this scenario. In the OCI, we classify the reserve movements between two groups depending on where the numbers eventually end up. These two groups are items that will not be reclassified to profit or loss and items that may be reclassified to profit or loss. We'll talk you through when to use these groups in more detail in later units. Our revaluation today is classified into the first group. We bring these movements together in the statement of changes in equity, which shows what has happened to each equity account during the period, reconciling opening to closing balances. Something else we want to show you here on this statement is something that affects the retained earnings bucket but doesn't sit within OCI. That's where we have transactions with owners of the company. It might be a share issue, a share buyback, or in this case, a dividend. It appears here in the retained earnings column in the statement of changes in equity, but it's not included in SPLOCHI. In case you're wondering, this is what the dividend journal entry looks like. Going back to our overall picture and the revaluation of the land, these closing balances are what we see on the statement of financial position, the balance sheet. We are going to cover a lot of items in the fin module that end up in other comprehensive income. You may like to revisit this video when we get into the specifics in later units. Some examples later on are, in Unit 5, we talk about translating financial statements from a functional currency into a presentation currency. Differences go to the foreign currency translation reserve. In Units 7 and 8, we talk about revaluations of property, plant and equipment and intangible assets. Often these revaluations hit the revaluation surplus account. In Unit 9, we talk about hedging and in particular cash flow hedges. We'll talk here about the accounting and amounts that hit the cash flow hedge reserve. And in terms of exams, when you're doing an exam question that talks about how an item is treated, often the choice is between the profit and loss and other comprehensive income. So be conscious that the difference means one actually hits your profit in the year, whereas the other is an amount that is carried forward. Remember, reserve movements carry forward. As you answer an exam question, it's important to clearly show this understanding and label your answers clearly for the markers to see. We hope this has shed some light on how other comprehensive income fits into the big picture of the fin module for candidates. Don't forget to revisit this video as we get further into the module, and remember you can always post to the forum if you have any questions. Thank you.